Hello everyone, welcome to another video. All right, so we're going to start off this video by admitting that I took a loss just now. It was a freaking horrible loss. So I'm going to break it down, right? So we hit a key level, which is the topic of this video, by the way. The key level, that was the IFVG on the 5 over here, which you guys can see. Took the buy here, stop loss down here, sorry, down here, just came and hit me. Okay, so that kind of sucked, right? Now, question being, how could you take another trade? Yeah, because look at the time, it's currently the macro timing. And if you were to go and take another trade, it would have to be based on an IFET that forms here right now. Okay. Anything else is just risky business because right now nothing's working out in terms of price action. It's all this choppy business. It has been that way. And then all of a sudden it'll just start to spike. So I don't know why. I think it's because NFP weak and FOMC. So gotta roll with it. Right. But anyways, it's a losing day. Uh gotta take it in stride, right? How your account balance is essentially as follows, right? If you cannot accept that this is a losing day, if you cannot accept that, okay, now you lost money, uh, chances are you're going to lose your account or you're going to take trades, hoping that the next one will be better. And it's going to fuck everything up for yourself. And then you're going to come to that realization later on, oh my God, what if I just waited? If I waited and then I saw this setup, then I wouldn't have lost all this money. That's a you problem. Okay. The only way you can fix it is by being more intentional in what you are doing. Okay. How many losses is you going to have to take for you to understand that? Okay. And I don't have to uh, rush this. I just need to chill, wait for the setup, wait for the macro timing, and then take the trade. So that's all there is to it. Okay. So now this suddenly goes up, right? If it suddenly goes up, starts spiking up. By the way, my TP was supposed to be here. Forced a 3 standard deviation, 2652. If it goes up now, fuck, I'm mad. I'm mad. But don't just chill. It happens. Okay, it happens. Right? So what are we going to talk about in this video? In this video, we're going to be talking about key levels, and we're going to be talking about the specific hour inside of each training session in which you're expecting price to hit these key levels. Okay. Now, key levels, right, is very obvious. I use Malaysian SNR. Yeah. So Malaysian SNR is essentially when you have the QM level, right? So I'm just going to show you one side. You guys can guess the other side, right? You have the break and retest level. Okay. Then you have essentially any level that doesn't get hit. You see this move over here, it's unwarranted, meaning it did not hit anything. It did not hit anything at all. It needs to have hit that or any other SNR level, right? So that, and also the final one is the gap SNR, right? So da da da. Okay, whereby the gap in between, it's like a, that base thingamajig, drop base drop, rally base rally, and that sort of a thing, right? That is that. That's very important. Okay, so we are interested in the closing price of these levels. Okay, only the closing price, not the open, no, not anything, just the closing price. Okay, and you have to understand that there are levels that can be inverted. Like you see over here, this was resistance, now it broke and became support. This one, if we start trading above it and invert it, it's going to be the same as this one. But you cannot inverse this, of course. This one you can't inverse. Okay. This you can. Why? Because this is a gap SNR. So if it's a gap SNR, what's essentially going to happen is if you suddenly get a close down here, right? Then this is the next level that we're going to refer before going lower. Okay, that's the next level that you will refer before going lower. So these are the key levels, not no FEG, no nothing. FEG, they're only using that for our entries, okay, to gauge exactly where price can go. Because you have an FEG, fair value gap, and price goes into that gap, and then it can react from anywhere, right? But in reality, it's reacting from one of these SNR levels, okay? Because price does not refer to gaps. Price only fills in gaps. Okay, there is no metric in quantitative finance that suggests what a gap is. Okay, they're only going to refer to price levels. That is going to be closing price, opening price, high and low. Understood? Okay. Now, these are the key levels. Okay. So there's a thing where I created, right? Now, I don't know which Tom, Dick, and Harry is going to say they created it and I copied it from them, but I don't watch anyone else, right? Only my shit. So there's a thing where we are interested in the first hour of each trading session. Okay. So, for example, London, 1 o'clock to 2 o'clock. Asia, 6 o'clock to 7 o'clock. Extended trading hours, 4 o'clock to 5 o'clock. Then New York session, 7 o'clock to 8 o'clock. NYFC, 9 o'clock to 10 o'clock. And PM, 12 o'clock to 1 o'clock. London close, 10 o'clock to 11 o'clock. And also PM session, 1 o'clock to 2 o'clock. Right? These are times in which you are expecting price to hit a key level. And if they don't hit a key level, then it's going to be like a manipulation profile, right? So for example, if I remove the fluff over here for a second, just remove this and this, right? This here is the 1 o'clock to 2 o'clock price range and time range for gold. Okay, it's for gold. So I'll do you something. If you go to the 4 hour, okay, you see how this is the key level. See the gap SNR here. That's a key level right there. Okay, now note this and go back to the 5, and we can see that that 1 o'clock, 2 o'clock range, it did not hit anything at all. But we broke out, manipulated, and then we hit a key level. You see that? We broke out, we manipulated, and then we hit a key level, which is my basis for going long, in addition to the fact that Trade Easy said I should be going long. Okay, that's that. Now, if you take it one step further, here for the Asian session, right? So if you go back, come back here, and if you go to the 4 hour chart, daily, whatever, right? We know that this is the Asian Open here. Okay, the SNR is where? Here. See the gap SNR. Okay. Now, if you go back to the 5 minute chart, yeah, what can we see? We can see once the Asian session opened, the range itself hit that key level. So, is there a need? Yeah, is there a need for price to go below here? Sorry, my bad. This one. Price to go below this. There is no need. So then, question is, Sean, why did it go below? Okay, because for the Asian session, these 1 hour ranges, we can use two of them, 6 to 7 and 7 to 8. Okay, like so, like this. Therefore, if you consider the 7 to 8 range, we know that, okay, you know what? Yeah, we came and we hit the key level and we're going up. Perfect. So the range actually did it. The time range actually did it. Okay, to put this into perspective, maybe another session. Let's see. So if you go to yesterday's price action on gold, let's go back here. So let's go to 3 o'clock. Okay, there we go. Now, if you take a look at this, between 1 o'clock to 2 o'clock, which is there, right here, we can see that that's the range. Yeah. Now we'll go to the 4 hour and see, is there any key level below that? Right. There any key level below that? So we have that. We have that here. Bearish gap gets inverted here, and now it's being used over here. Okay. So now that we know that, now that we know that we have this, okay, we can say that, wow, we open and then we smash down into key level, into a key level. Okay. Then you can be like, wow, I can buy it. Yeah, I can buy it. I'm going to wait for my IFVG. there, and then price started to rally like mad, right? There we go, over there. Okay. Now, remember I said there's another range, 4 o'clock to 6 o'clock. Sorry, 4 o'clock to 5 o'clock, right? So this 4 o'clock to 5 o'clock here, watch carefully, 4 o'clock to 5 o'clock over here, that's another frame of reference. Okay. It's another frame of reference whereby when price deviates from the range, maybe if the range doesn't do anything, if price deviates from the range and if it hits a key level from that point, when it goes above and hits a key level, then hits a key level, you can consider going short. Why? Because that's that manipulation. But what about this? Well, this one, because we're in the London session, right? We hit the macro, we hit the key level, they're going up for the projection, yada, yada, all that is going up for liquidity. Now, after this, we know that based on this range, we go and hit the key level, we can look to sell, right? So, question is, are you going to sell between 6 o'clock and 7 o'clock or 7 o'clock, 8 o'clock? 7 o'clock, 8 o'clock. Why? Because 6 o'clock, 7 o'clock, it is the dead zone, right? So then, what's this? We can go to the 3-minute chart. Now we can find out what that is. It's an inverse gap. So what you can do is you can take a sell here, keep a stop loss above there or above the IFEG candle there, and you can go short. So in this case, if you want to go short, what's the protocol? Protocol is we're going to go short until the London low. Why the London low? Because the daily bias is bearish on this day based on trade easy. Let me see if it's correct or not. Yes, you can see right hand side daily bias is bearish, right? So what I can do is I can target the London low there. Stop loss hit. So okay, hit my stop loss. Of course, I play this too fast. I'm going to enter again and we target the London low. Okay. Now that is over with, we have the next one. The next one is 7 o'clock to 8 o'clock, right? So between 7 o'clock and 8 o'clock, right here, here to here, like so. What do we have? We can see that price is already hitting a key level, but that 7 o'clock to 8 o'clock range did not touch that key level, right? So what is it going to do? It's going to hit that key level again and then go down. Wow, that's the sell, right? What's the next one? I said we have another one at 10 o'clock to 11 o'clock, right? So here, you're waiting for these ranges to play out there, okay? Now, between 10 o'clock and 11 o'clock, there, here, what you're going to do is you're going to delete the existing lines because we don't need that right now. And what we're going to do is we're going to see, okay, where's my key level? Are we already inside of it? Are we going to go and hit it? I don't know. So we go to the 4 hour, okay? And on the 4 hour, we can see that here we have a key level there. See, okay. So given that we have a key level, yeah, we can see that we open this range by hitting that key level. So we can look to go low when price breaks above the range, right? Now, after price hits the range, what have I taught you? I have taught you that you can now look for inducements. So now you can look for inducements inside of this range. Okay, so we go to the 15. Okay, you can see that price comes here. That would be the inducement. I will go and check if there's any higher time frame candle. Same thing. 1 hour chart. More or less. Okay. Same thing, right? We can say this candle also, but let's see if it even goes down there. I think it should. Okay. So let's take a look, right? Either way, you want to look for longs. Okay. And where is the IFVG? So you can go for the IFVG long over here. That's okay. And it goes up. Okay. The day ends and the next day begins. And now this is where we're at. So price doesn't even come in. Okay, that means whatever else is over here is causing price to go up. Right? So forget that now. But you can see just how important that hourly ranges. Okay, because now we can take this one step further. I'm taking this one step further every single damn time. Okay. Uh, we have the 12 to 11, sorry, 12 to 1 range and the 1 to 2 range. So now if you take the 1 to 2 range, because the lunch hour is more or less useless, if you take the 1 o'clock to 2 o'clock range, here, there, okay, where is the key level? Yeah, from this point, where is the key level? So let's go back. Here, this is the, oh, sorry, this one here. That's the range. That's the beginning of that 4 hour candle, right? Price goes down into something. What is it going down into? This key level here. What is this key level? This key level is essentially looking like this. That. So, like this. Okay. That is the key level. Now, we go back to the 5 and we see, okay, did that actually happen? Did it actually happen? Yes. See, we open, we go, and we hit. So, do we need to go below this guy? No. No, even if it goes by a very small margin, that's okay. But it doesn't have to go big moves into it. Doesn't have to do that. Okay. Then you can see that this is the current situation that we are finding ourselves in, right? So that's today's one. That's also today's one. And you can see, wow, wow, now this asshole goes. Fuck. Okay. So now let's take a look at this. What do we have? We have IFVG here. You see that? Okay. Now what can we do? Let's okay. You know what? Let's just fuck it. Let's just take a long. So go here. We put it at 15. Okay. 15 pips. Stop loss below the IFVG candle here. So that means if I'm going long here, I'll go long. That will be my stop loss. I'm gonna be a bit safe because I took an L. So go 15 pips. Like so. And what we will do is we will then target this the okay with partials coming off here because there are two projections here and here. Just to be safe, I'll take mage partials off over here. Okay. And that will be the trade. So that will be the London trade that's happening, by the way, inside of the London macro. Right. Now, when you see moves like this, massive moves like this, right? You are inclined, you're psychologically inclined to say, oh, I'm gonna buy. No, you're gonna wait for the perfect damn time. Okay. You gotta wait for the perfect freaking time in order to actually execute on the most perfect move because every single day you're given one or two options. Okay, given one or two options in order to take a trade. All right. Now, when you exceed these two or three options, let's say, now if they hit stop loss, then fuck. It's just a shitty day overall. It's so choppy, right? But anyways, what I was saying was, when you're given these options, right, one or two trades a day, that is the sweet spot. Okay, one or two trades a day, that is the sweet spot that you're always going to have on a daily basis in order to make a profitable decision. You know what I'm saying? That is all you're going to get in order to make a really profitable decision. Okay. And if you can't really make a profitable decision from that point onwards, in fact, if you take that trade and if you lose, you got one more. Because, yeah, that first loss is not going to affect you. Yeah. Because you're thinking to yourself, oh, you know what? Maybe my stop loss was too tight. Let me let me put it one more time, but let me make my stop loss a bit wider, right? And then you take the next trade. But the only problem is you're taking the next trade immediately after the first trade hits stop loss. So what what then? It's a bit of a tricky situation then, right? Because if you're taking the next trade immediately after the first trade hits stop loss, then the first trade stop loss might as well has just been larger, wider, right? So you're feeding into a losing trade. So that trade is still going to be a loser, right? So you got to wait for additional confirmation. Yeah, price is going to move regardless of your damn confirmation, but you got to wait for the confirmation that you need in order for you to be confident to say that, yeah, you know what, this is my buy. Yeah, this is my sell. If you don't have that confirmation, then tough luck. Shit's going to get really hard. Okay, like for me now, if this hits stop loss, okay, that's my two trades today. I took a buy earlier. I'm taking a buy now after some time has passed, and I hit stop loss. Maybe it's just a choppy session. Maybe it's just a seek and destroy session, and I can't do anything about it, which I can't, by the way. Oh, I can't choose when it is a seek and destroy, right? When it happens, it happens. You won't know it's a seek and destroy until it is a seek and destroy. All right. So to sum it up, the ranges, 1 hour ranges, you guys can rewind back into the video and you can figure out what the ranges are. It is the first hour of every trading session, first hour of every tradable session, right? So Asia, London, extended trading hours, New York session, NYSC, London close, and also the PM session. Okay, those 1 hour ranges, they serve as a means of understanding manipulation. Okay, these 1 hour ranges, they serve as a means of understanding manipulation and as a means of understanding where price is relative to actual proper key levels. Okay, so the more you know, the better it is for you. All right. So, anyways, guys, with that said, I hope you have a good one. Bootcamp is open, one-on-one is open, Trade Easy is open. Trade Easy is now heavily discounted to $39.99 per month. Uh, Easy way to make money. Use it every day. Losing trades happen, but what matters is if you win in the long run. So, with that said, I'll see you in the next one. Good luck and good trading. Bye bye.